You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer. Hi there, it's Victor here from foreshowmarkets.com. In today's video, we'll be differentiating between reversal and continuation patterns. Okay, so in the course of our trainings, as we go on, when I see concepts or ideas that I think newbies, those who are new to trading, may get confused about, I just quickly divert and clarify on those. So I feel the need to clarify on reversal and continuation patterns. Okay, since I started showing you chart patterns, I need you to understand that some patterns are reversal patterns while some patterns are continuation patterns, and every pattern you will see from here on out is either going to be a reversal pattern or a continuation pattern. Okay, now what is a reversal pattern? A reversal pattern simply is simply letting you know that, first of all, a reversal pattern happens after a good uptrend. Okay, a reversal pattern is simply trying to show you where this uptrend is going to do a reversal. Okay, a complete reversal, a very complete reversal or big reversal back down. Okay, now reversals don't happen all the time, and so it requires a lot of patience, okay, and a lot of doing your analysis and waiting for the right time to enter that trade for the big move down. Okay, so a reversal pattern usually happens at the top of a previous trend. Okay, some examples of reversal patterns are, so let me clean this. The examples of reversal patterns are what? Let's look at the examples we have done in the past, from the double bottom, double top, double bottom. Okay, so your double top, double bottom is a reversal pattern. Okay, so trend is going, what's going on? Okay, so the trend is moving up, going up. Okay, and then as a trader, once you identify that this trend is the major trend is up, what you want to be looking for is, when can I catch the big move down, the reversal? Okay, and one of the ways you can catch a reversal is using the double, but in this example you need to use the double top is an example of a reversal. So you can see it's doing, the market is doing higher lows, higher highs, higher low, higher high, higher low, higher high. Okay, so that in its own, already you know that that's an uptrend. Okay, but for you to catch a big move, most likely this uptrend cannot go so much further up. Okay, so it's either we're going to have a reversal or a correction. Okay, so one of the ways you can spot this reversal is when you see the double top. So price came down, higher low, but it failed to do a higher high. Okay, and then of course you know your neckline on the double top, and then it did this. Of course, from here it has broken the trend line. It has broken the trend line here, and then coming for the neckline. Once it breaks the neckline, this is a hint that this pattern is likely reversing, and that is why with the double bottom we sell here. Put your stop loss above, reasonably enough space above them, and then you expect a take profit, reasonably down there. So your double top and your double bottom are reversal patterns. Okay, so let's look at the double bottom. So you have a down trend. Okay, of course, lower highs, lower lows, and then the moment you see this kind of pattern where, let me take it down a bit further. You see this kind of pattern where the price refuses to go lower. Okay, so this is your downtrend. This is your downtrend. Now the price refuses to go lower here and then comes back up and breaks above. That's your neckline. Now once you see this pattern, this is telling you that there's a very high probability. Remember the principle of technical analysis, history tends to repeat itself, and every time we see a double bottom in a downtrend, it is giving us the hint that this trend is likely reversing. Okay, so those who are trading double bottoms will buy above here, put your stop loss below there, below support there, and then take profit above there. So those are reversal patterns. Reversal patterns are simply telling you that they occur after major uptrends and major downtrends. Okay, another example is the head and shoulder. Okay, so head and shoulder, this is an uptrend. Okay, and then once you start seeing this pattern, it does a lower high or a higher low, higher high, right? And then does this, then does this. Of course, your mind should already start ringing. Okay, possible head and shoulders forming. You draw your neckline. Okay, draw your neckline, and once it breaks, you sell here. Stop loss reasonably above this previous resistance here, then take profit down there. Now a head and shoulder usually gives you a very, very big move. Okay, possibility of take profit equals to 4 times of your stop loss. So whenever you see an uptrend, now understand that this uptrend can go on for 2 weeks or 3 weeks or 4 weeks. Okay, so guys who want to catch the big move down will be waiting for reversal pattern. So what you want to do if you want to catch the big move down is to look for a reversal pattern, because it's going to give you a hint that all of this big move going up, okay, the market is going to reverse all of it, so coming back down, and that's a lot of profit. Okay, they don't happen all the time, okay, because they happen at tops and bottoms, and you know that once a trend starts, that trend usually sustained for a long period of time. Okay, so most times in an uptrend like this, you will be looking for buy opportunities in the pullback, but then a time comes when everybody is buying, okay, and the price really needs to do a reversal or a correction before it can even go up higher. All right, let's do an example for an inverted head and shoulder. So you see a strong trend going down, okay. Now you start seeing this pattern goes up, comes back up this way. Remember, I taught you head and shoulders already, so I don't need to be telling you what this is already. So once you see this forming, it's already ringing in your mind. Okay, this is a possible inverted head and shoulder. It should tell you that this market is likely to reverse. Okay, this market is likely to reverse. Okay, and all of this is good, very huge profit. Okay, so head and shoulders, inverted head and shoulders, double tops, double bottom are simple examples of reversal patterns. Let's see if there's any other one I can use as an example. Double top, double, okay, head and shoulders, inverted head and shoulders. Okay, so this, like I showed you in the previous video, we also have, let's look at continuation patterns. Continuation. Okay, so you have a trend going up. Now, so it's not every time that you have a trend that it is going to reverse. It's going to reverse like immediately. Okay, some of these trends, so this is your uptrend, this is your downtrend. Now some of these trends can go on for months. It can go on for 2 months, it can go on for 3 months when the trend is very, very strong. Okay, so what you usually have in a very strong uptrend is a situation whereby the market goes up and then it breaks, does a little bit of correction, and then does a big move upward. Okay, the moment price breaks above this previous high, you have what you call a continuation. When it breaks and sustains the move going up, you have what they call a continuation. And there are different patterns that show you when a continuation is about to happen, and these patterns are called continuation patterns. Okay, an example is the example we did in the previous video, which is the rising wedge and the falling wedge. Okay, so if you want to know if this trend is likely to continue, maybe you are expecting a reversal here and it failed to do a big move down, but instead of you seeing a big move down, you saw something like this. Okay, right? So the moment you see that the market is refusing to come down huge, and instead it is doing this kind of small consolidation, just gradually up down in a small wedge, small triangle like that, that should give you a heads up. Okay, a heads up that a rising wedge is a falling wedge is falling. Okay, a falling wedge is falling. And once your mind starts showing you a falling wedge, once your eyes start picturing a falling wedge, the next thing that should come to your mind is continuation. Okay, and so we are waiting for, let me try and make this a little bit better. So we are waiting for the break of this trend line and break above the previous resistance there, and we can say, okay, this is a possible continuation, expecting that, example, if the movement from here to here was 50 pips, okay, you can expect that once price goes above the previous high, you should see at least 50 pips, at least minimum 50 pips, minimum 50 pips. And so you can do 50 pips, you can do 100 pips, you can do 150, you can do 200 pips above the previous high there. That is what you call a continuation pattern. Okay, for the example of the rising wedge, it happens in a downtrend. Okay, so you see a downtrend happening. There are two things that can happen. A reversal can happen in the form of a double bottom and then it goes back up. Okay, but once you see that the reversal is being very, very difficult, okay, and you start seeing something like this, it's going back up, but it's not going back up much. Okay, your mind should immediately tell you that this is not a reversal but a correction. Okay, and once you have a correction, then you should be having a mindset that there's going to be a high probability of continuation. And so once this breaks the trend line and breaks any of the previous supports, example this one, we can say, okay, sell, stop loss above there, take profit down there. So this is a rising wedge, and whenever you see a rising wedge in the market, it's giving you a hint that a big move is about to continue in the initial direction. Okay, so I hope you'll be able to understand the difference between a reversal pattern and a continuation pattern. Let's see, the next one might be a continuation. Okay, so we are going to look at triangles now. Okay, triangle is another example of a continuation pattern. We're going to look at triangles in the next video. So always in your mind, be differentiating, okay, between reversals and continuation. Is part of the things you need to master when you want to catch big moves. Okay, so I hope you've learned something new in the video. If you learned something new in this video, give us a thumbs up. If this is your first time you're watching any of our videos, make sure you click the subscribe button, click the bell to the right of the subscribe button, and click all notifications so that you can get notified whenever we upload a new video. All right, so I'll see you in the next video. Cheers.